So here's a huge question. How do you make massive investment decisions, especially with public money, and make sure they don't fail? Well, we're about to explore a really powerful framework designed to do just that. It's the UK Treasury's 5-case model. Honestly, think of it as the architecture for disciplined, successful investment. But before we can really appreciate the solution, we have to get our heads around the problem it's designed to solve. And it's a big one. The staggering rate at which major, really expensive projects tend to fail. You know, if you look at almost any major public project that's gone off the rails, you'll rarely find bad intentions at the root of it. Nope. What you will find is ambition that has completely outrun discipline. Projects get greenlit based on pure optimism. Budgets are wildly underestimated. And all those tricky risks, they get conveniently ignored. So the core issue isn't a lack of vision. It's a critical lack of structured scrutiny. And that is exactly the gap the 5-case model was built to fill. It was formalized by the UK Treasury, and let me be clear, this is not just another layer of bureaucracy. It's a system of disciplined reasoning that's designed to happen before a single dollar is committed. So how does it work? Well, the model forces any proposal to be justified from 5 distinct but totally interconnected perspectives. It asks, is it strategic? Does it provide real value? Is it actually deliverable by the market? Can we afford it? And finally, can we execute it? By answering these 5 questions, you're essentially building a defense against 5 different and frankly predictable types of failure. All right, let's break this down into those 5 core questions. I find it helpful to think of them as 5 critical gates that any proposal absolutely has to pass through to even be considered viable. Okay, so first up, the model starts with the big one, why. That's the strategic case. Then it moves to value, making sure the economic benefits actually outweigh the costs. The commercial case tests whether this is grounded in market reality, while the financial case confirms we can actually afford it. And finally, the management case asks the ultimate practical question, can we really pull this off? You see how each question builds on the last? It creates a really comprehensive picture. And this really gets to the core philosophy of the model. This is not a checklist you just work through from 1 to 5. No way. It's 5 simultaneous disciplines, 5 different lenses of skepticism, all focused on shaping one single solid decision. Now, you might be thinking this is just some government framework, but it's really a system of thinking that's validated by multiple professional disciplines, and each one brings a totally critical perspective to the table. So, if you look at it from the world of public finance, through bodies like CIPFA, they see the model as a tool of stewardship. It reinforces this really important idea that public money isn't just capital, it's entrusted capital. That perspective demands accountability, and it frames every single investment decision as an act of governance. Then you have the procurement and supply chain experts, maybe from an organization like CIPS. They view this through the lens of market realism. For them, the commercial case is the crucial bridge between a great idea and a deliverable reality. It forces those tough questions about whether suppliers are capable and what the risks are, elevating procurement from just a transaction to a truly strategic function. And of course, you can't forget the project management world, right? Folks from PMI would tell you the focus has to be squarely on execution. I mean, a brilliant business case is completely worthless if it collapses during delivery. The management case makes sure that doesn't happen by demanding robust governance and risk management from day one. As they say, strategy without a delivery architecture is just an illusion. And this right here reveals a really common misunderstanding. The 5 cases are not a linear sequence. They are interlocking structural layers. Think of them like gears. If one fails, the whole machine just grinds to a halt. A weak strategic case completely invalidates the economics. A flawed commercial design destroys the financial assumptions. They all have to work together at the same time. So that raises a pretty critical question for any team using this model, right? What happens when one of those gears, one of those cases, is weak? Well, the consequences are predictable and honestly, they're devastating. A weak strategic case means you end up building the wrong thing perfectly. A weak economic case means you waste a ton of resources on a low-value project. And failures in the other cases, they lead directly to market breakdowns, funding crises, and total delivery collapse. The real power of the model is in identifying these specific failure patterns before they become irreversible. Ultimately, the 5-case model acts as a kind of institutionalized skepticism. It's a built-in defense mechanism against our most common human biases, optimism, scope creep, overconfidence. It forces that necessary, sometimes uncomfortable confrontation with reality before a single dollar is ever committed. And this core principle, discipline before commitment, is exactly why the model's logic extends so far beyond its origins in the UK government. It really doesn't matter if you're talking about a massive infrastructure project, a corporate digital transformation, or a huge defense procurement. The logic holds. Anywhere that capital is scarce and accountability is absolutely paramount, this architecture of disciplined commitment provides immense value. And this leads us to what might be the single most important idea in this entire framework. An investment, it isn't just a yes or no decision, it's a structured, defensible argument. At the end of the day, it all comes down to one core principle: discipline before commitment. The model forces a project to prove that it is strategically justified, economically valuable, commercially viable, financially sustainable, and managerially deliverable. Only when an investment is passed through all 5 of those gates should the capital be released. And believe it or not, this is really just the high-level architecture. In our next explainers, we're going to be doing a deep dive into each of the 5 cases, one by one, exploring the specific tools and techniques you can use. So join us as we go deeper into this really powerful system for investment governance.